Hi, I'm David, and I'm here to talk to you about cryptocurrency price analysis for Thursday, March 7th, 2019. Today we're going to take a nice look at Bitcoin, not just where it is now, but also we're going to look at 4 signals that would point to the beginning of the next bull run. Have those signals come in yet? And if not, what are we waiting for? So without further ado, don't forget to like and subscribe below. Let's jump right in. All right, Bitcoin on the daily time frame. There's just a few observations I want to make here first. First of all, I believe I spoke about this in a previous video and also a recent article I wrote on price action, that it looks like Bitcoin was trying to get into an ascending channel here, and this dip right here knocked us out of it. And now we are in this sideways channel between, here on Coinbase it's between 3,700 and 3,900. On like Bitfinex and some other exchanges it's up about $100, between 3,800 and 4,000. But you get the idea, it's about a $200 channel that we're stuck in. On the lower end, we have this 100-day moving average providing some really nice support, aligning with the bottom end of the channel. On the upper end, we have basically what seems to be the kind of like the perceived resistance at 4,000, the psychological resistance. Again, it's on Coinbase, it's more like 3,900, but I believe the same principles apply. So what we need to do, and what I think could happen, is if we break up, and it looks like we're going to test it, if we break up out of this $200 channel, we're going sideways here, we'll probably test the bottom of the ascending channel, which will align about with the psychological at 4,000, give or take. That'll be a bit of a good deal of resistance. If we can push into the channel, there's not as much blocking us from running all the way up to the top. We could test up as high as about 4,400, I dare say. I don't think we'll break down too much. I think this bottom of the channel will hold. If we do break through it, we have just below that at about 3,600. We have this 50-day moving average. And 3,600 has also proven to be pretty solid resistance and support psychologically. So upside 4,400 at the highest, downside I'd say 3,600 at the lowest. All right, here we're still looking at Bitcoin. However, I've zoomed out, switched to the weekly time frame, and we're also on Bitfinex now simply because their market data goes back further than Coinbase's. So I want to talk about some signals that would indicate the beginning of the next bull run and see where we're at relative to that, and if any of those signals are coming in yet. So again, here we have Bitcoin. This is on the weekly. This is basically our whole most recent market cycle. And I'm going to entertain the possibility here that there might be a double bottom forming on the weekly time frame here. Originally, we hit the recent low of 32.1520 back in December. And that was the lowest we've been since the whole run-up and crash. We've actually grown a little bit since then, sure, and it's been kind of nice. But if you compare to the previous market cycle, and I'm going to do this a lot, this is where I get a lot of my ideas from, is that here we have the previous run-up, consolidation, and we see that when we get to the valley of, basically crypto winter, here we have the first bottom coming in the week of January 12th. We hit a low of 166.50. Just to be totally clear, I know that I can see there was a lower low about a year prior over here, but given the overall trend, this seems like more like an aberrant data point and less relevant to the actual shape we're forming. So we'll call this basically the low of the trough. And yeah, so it was, what did I say, 166.50. Then we spend most of 2015 bouncing in around a little over $100 range here, until near the end of summer, the week of August 15th, we retest that low at 162 and were unable to break lower. Ever since then, it went up. We never saw that low again with Bitcoin. It began basically the slow growth towards the next bull run, leading us into 2017, and we all know what happened. Now we come back to here. Now, again, there's no guarantee that this is the first of a double bottom forming, but I do want to show you another indicator that seems to reinforce this narrative. All right, as you can see, I've now switched to include the 50 and 100 week moving averages. And I wanted to talk about this bearish crossover we just saw. Generally speaking, this is when the 50-week moving average is dropped below the 100-week moving average, causing this to be what's called a bearish crossover. And it is generally a bearish signal, but especially in a case like this, it can also signal that we've kind of bottomed out as far as momentum. There's not a lot more bearish pressure anymore. But why am I including this as confirmation with the potential for a double bottom? I will show you once again, going back to the previous cycle. Here we see, now this is closer to the beginning of the data, so we've only had gotten enough data at this point to begin having 50 and 100 week moving averages, but here they are. And look what we have here, a bearish crossover. Here's that bottom at 166.50 that I recently talked about, the first of the two bottoms. And right about in the middle is a bearish crossover. And then we have this second bottom, which causes the price to start to rise again. And about a year after the bearish crossover, we see a bullish crossover. And although the price was already rising, that seems to be a catalyst for the price to start rising even more exponentially. As you can see, it's rising kind of above this line here. So, going back to now, still not a guarantee, but it's so far fitting really nicely for history to repeat itself. We have the first bottom in. We have a period of consolidation in a pretty tight range, and here we have the bearish crossover occurring. It's not implausible that if this plays out, we could get, in the next 6 months or so, the second bottom, leading to the beginning of a rise, leading to the inevitable bullish crossover, but that could take a while, like a year, and that could be the beginning of the next bull run. But that's only two signals so far. Let's look at a third. All right, next I want to talk about this tweet from CoinDesk Markets. I referenced this recently in a price analysis article, and they basically have pointed out a pretty interesting correlation that's been observed between Litecoin and Bitcoin over the last couple of cycles. And let's zoom in on that a little bit. So I'll walk you through this, but here's the previous market cycle of like 2014, 2015, and here's the current one leading up to today. Now, what they observed is that after the initial exponential run-up and collapse that happened last time, both Bitcoin and Litecoin bottomed at almost exactly the same time, which is unto itself not that surprising, but they then experienced a little bit of a period of kind of sideways consolidation. And then here's where it gets interesting, is that Litecoin had a break from the bearish trend at the same time as where Bitcoin did not do very much. It had a little bit of a spike, but it didn't break outside of the bearish trend. After which both had a bit of a period of consolidation again, leading to this blue line, which symbolizes the Litecoin halving event of August 26, 2015. Now, after that point, we started to see growth come into Bitcoin, and perhaps coincidentally, but I'm not so sure it was, that halving event coincided pretty nicely with the second of the double bottom we've been talking about in the Bitcoin chart. It wasn't a bottom on the Litecoin chart, keep that in mind. But it does come within about a week or so of where we saw the bottom on the Bitcoin chart is when this halving event happened. That's why afterwards we started to see growth in Bitcoin. Litecoin actually kind of leveled off, but they both responded to the exponential blast at the end of 2017. So this brings us to where we're at now, the current cycle. We can see the growth and collapse. They both bottomed at almost exactly the same time, leading into 2019. They both had a little bit of a period of consolidation afterwards. And here again, we see Litecoin breaking the bear trend. Bitcoin's not breaking the bear trend. And we're heading towards the next Litecoin halving event in August. So if history is repeating itself, we could possibly expect, one, that we will see a little bit more consolidation leading up to that event from both coins. And also, it might give us an idea of where we might expect the second bottom for Bitcoin. Now, it's not, again, no guarantees here, but heading towards it, if we don't see a bottom before that, that might be where we can expect to see it if it follows the same pattern. So that's my third signal. To talk about the fourth, I want to talk about another halving event, Bitcoin's halving event, coming up in a little over a year. All right, the last signal I want to talk about has to do with Bitcoin's own halving event. Now, this chart shows the history of the Bitcoin price expressed logarithmically against the entire history of the Genesis block, the first halving event, the second halving event, and the upcoming third halving event middle of next year. So there's some regular patterns we can observe here that have formed. We always have an exponential run-up followed by consolidation. There's always a low about 1 year before the next halving event. Then you see another exponential run-up, consolidation, and another low about 1 year before the next halving event. Now, this is the previous market cycle. This is the double bottom we've been talking about here, and then where this red arrow is here. The second bottom came about 1 year before the second halving event. Then, going into the current market cycle, we see exponential run-up, consolidation, and if this model holds, this would be the first bottom, and the second bottom would be expected somewhere around this red arrow, around mid-2019, which, if you remember from the last Litecoin chart, would coincide with Litecoin's next halving event. Remember, we saw that Litecoin's halving events seem to coincide with Bitcoin's second bottom. So if this model holds, that would still fit. It would be right here about 1 year before Bitcoin's next halving event, which will come mid-2020. In the year leading up to that, we'll probably see some, as we saw in the last cycle, some growth, but not exponential yet, at least until we get to the other side of that halving event, probably heading into 2021. So to recap, the 4 things that I think we're going to need to see before the next bull run can really be said to be in. First off, we don't necessarily need to see a double bottom, but a double bottom would give us a lot of faith that the bear market had come to an end. We will need to see a bullish crossover on the 50 and 100 week moving averages. That'll probably come after we've started to see some growth, but before it's gone exponential. We'll probably need to get past the next Litecoin halving event, and we'll probably need to get past the next Bitcoin halving event as well. Now, this isn't meant to be overly bearish. We could definitely see some growth in the meantime, but it does put us at like 1 to 1.5 years of lower end market before we start to see the bull runs really kicked in. News, fundamentals could change all of this. Really positive or negative Bitcoin news could throw the technicals out the window, could take away everything that we've been observing here today. But we can't predict that, can we? So that about does it for me today. As I always say, this is not investment advice. This is just my opinion, some observations I've made. Go do your own research. Until next time, do not forget to like and subscribe below. Good luck with your trading.